9th of May. Let's go ahead and kick things off with a little risk disclaimer. We understand this risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the deal and you know the risks. All right, all good, all good. Let's get into just a social media slide really quickly. If you're following me out there on social media, preferably this channel here, youtube.com/Chris Pulver. If you're following me out there on other respective platforms, Facebook, Instagram, Twitter, Twitch, or TikTok, real Chris Pulver. That is it. No underscores, no duplicate letters, no numbers, no scammers. All right. I will not direct message you. If you want to message me, I'll answer. But I don't solicit. I don't have phony claims. All that's a bunch of crap. Please report, block scammers like that. All right. Happy Monday, everybody. Let's get started. Take a look at the currency strength chart. Nice to see everybody. Marilyn, good morning. Linda, good morning. Gary, what's happening? Andrew in the house. Chris, Ali, good morning. Currency strength chart, pound getting a little love this morning since around 5:30 a.m. Eastern time, just a few hours into the London Open. Euro in second. Dollar's been on the decline since around 7:25. Not complaining about that. A couple good positions are running our way. Euro Swiss creeping up towards some fresh highs. Hopefully that cup and handle is in fact a breakout, projecting that move up towards 106.50, possibly even up as high as 108. We talked about it a lot last week, I think on Friday, as well as in the flex room on Thursday. So pound as well. We're long on pound CAD, long on pound Swiss. That's working out pretty nicely. And I don't know. We'll see where the week takes us. The week is young. Here's the currency news or economic calendar. A lot of speakers this week. Fed speakers, UK Monetary Policy Committee speakers, OPEC meetings this week on Wednesday, CPI for the US, which will be interesting. Of course, that's going to be the hot topic, right? Oh, is inflation getting worse? Is it plateauing? Is it getting, we don't know. It's probably going to be higher. Fed's raising rates. We know that. Is it sticky inflation in the US? Quite possibly. Inflation expectations for New Zealand, GDP numbers for the UK, PPI out for the US on Thursday, and then U of M consumer sentiment on Friday with another Fed speaker. So a fairly light calendar, but remember last week was a big deal with the FOMC on the 4th, right? FOMC, they did raise rates. We had non-farm payroll on Friday as well. They beat the jobs, but slight loss or slight miss on the unemployment rate, slight miss on the average hourly earnings. Also, I believe we still have like 10 million plus jobs open. So we're still seeing like the great resignation, people still leaving. There were millions and millions of people that left their jobs in April. So it's not a labor, well, it's a labor shortage, not a job contraction. So, which again, I find that very interesting. Last time I checked, there's no stimulus money floating around. So, I don't know. If you want a job, get a job, I guess, huh? And go into this week, fairly light, probably some Fed speakers that will second what we've been noticing in the CME watch tool. So, CME Fed watch tool. The markets are still anticipating another hike in June, and that hike now is looking for around 50 basis points. This literally shifted last week. From last week to now, this has shifted to a 50 basis points hike as opposed to a 75 basis points hike. So that's what Powell said on Wednesday. 75 basis points is off the table. Market kind of reacted to that on Wednesday. Thursday was a horrible day. Friday was an indecision day. Today we're looking at pre-market. Everything is a little bit lighter. So 411 on the SPY for the close on Friday. We're looking at an open at 405. So futures is down on the morning by quite a bit. Dow Jones futures down 1.09%. S&P futures down 1.41. NASDAQ down 1.79. So more pain, more red. And we're going to look to see if there are some, bottoms that are getting put in, what the inflow situation looks like. Had some interesting reading over the weekend. Take a look at where we're at for the year. Year to date, we're in bear market territory on the NASDAQ and the Russell 2000. S&P is down 13.49%. Dow is down still single digits, but very close, 9.46. The 10-year, the big deal there, the TNX, the 10-year Treasury yield, 3.12%, up a big 161 basis points on the year. Also, this is kind of that potential exodus percentage where financial advisors will be calling their clients and say, hey, you remember that 14 years we've had stocks have been running, your 401k, your pension, blah, 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 everything's up and bullish. Maybe we want to take some profit, park you in a 10-year note. Let's get 3% yield over the next, 1, 2, 3, whatever years, right? Let's pack it in. So there could be some baby boomer fixed income exiting stocks and riskier assets into a fixed 10-year. Again, doesn't mean that's the right answer. Cash is not great. Bonds are not great because you're still losing to inflation. And we'll certainly see more of that this week. If the news for the CPI on Wednesday comes in higher, okay, so how much higher does the 10-year note go? I don't know. Does it go any higher? Does it start to plateau? We'll find out. So 3.13. Let me take a look at this on the weekly time frame. I think we had a Fibonacci level here that we were interested in watching. Also, these previous highs back in this is actually October 2018. Wow. So we've been on a rip, low to high swing. Let me drag this up here. So low to high swing, 618 extension has been hit. Now we'll look to see if we have another swing like so. So a pullback is certainly expected, somewhere between this 23%, 618% retracement level. If we're just going to have some waves, so wave 1, pullback wave 2, push wave 3, pause wave 4. So we could pull back into, let's say, 2.5 or so, but we are starting to look at, if this does continue to head higher with a fifth wave move, then we're talking the 10-year note up to 3.5 to 4%. Which would be pretty wild. And again, if you were at 4 to 4.5%, again, you could still potentially lose to inflation, but take way less risk and maybe have a 2 to 3% differential. And I think traders would be willing to take that risk and say, look, I'll eat the 2 to 3% for stability. So this does, and as I noted this is months and months and months ago. We talked about this 10-year note, and I had this entire area from like 2.5 to 3%. I had this giant box that said end of bull market, right? Fixed income exits, rate hikes getting priced in, all these things were months and months in the making. So now it is happening and it's coming to fruition. So market's on the heels. I'm still long volatility. That's a good thing. VIXM is trading at 35.38. We'll see if this continues to rally. VIXI as well. I like this instrument being long. My break even's in the 20s. And hopefully we have a nice little run higher. If it's going to get worse, might as well be long volatility. It's going to get better, then the broader market can recover. Tech might be the big leader. We might just have more runs in energy and commodities, but watching the SPY, of course, this week. Okay, so we'll take a look at the technicals here. Last week we discussed this in all the trading rooms. The SPY, 385 on the SPY is a 20% correction. Okay, we come back and we fall any lower to the pre-COVID highs. That's around 340. That's a 30% correction off the highs. That puts everything in bear market territory. If the SPY gets to 30%, it's very likely that the Dow is going to be at 20%. Right? If the SPY gets to 20%, the Dow is probably going to be in the teens, 13, 14%. So is it destined to come down to this 20% level? Is that going to be the line in the sand that the markets decide, hey, look, that's enough. It's time to rally? I don't know. But what we are seeing here is we've just had this dramatic fade the rally type behavior the last 3, 4, 5 weeks. And it is leaking into everything. In fact, interesting statistic here. I just read this morning. Take a look at this. Retirement fund is probably getting wrecked from the steep market sell-off. The 100 largest 401k funds are all in negative territory, and 88 of the 100 largest 401k funds are in double-digit losses. So when you're talking about the S&P down 13.49%, your average 401k is right along with it. So it's very difficult to have the broader market all in red and have your portfolio doing anything different. Now, the good thing is we have Forex to trade. The good thing is we have options to trade. We're still generating income. We're still lowering our cost basis. So eventually when prices do return or we have some winners, we can play the right sectors. We're still generating some profits. Like last week, I lowered the cost in quite a few things, had a couple stocks called away for profit. No complaints, even though we are staring at red across the board. So we continue to grind, continue to survive, and keep trading. All right. So this week, I know it's the expirations for stocks and options. Expirations will be 5/13. We have probably a few, but I'd say most of our expirations are going to roll in on the 20th, which is the monthly expiration. So let me go to the Equities on Demand Trade Tracker here. Let's see if we have any 5/13s. I know I've got a few. Some are going to be covered calls. Some will be some credit spreads. So let me get into this 5/13, and I have 3. So we have a credit spread on Ford, we have a credit spread on Coinbase, and we have a credit spread on DraftKings. So those are the 3 credit spreads I'll be looking to manage this week, potentially taking some ownership. The rest will be covered calls. So I'll be looking to add another covered call to Johnson & Johnson. I'll be looking to add and repair Uber, Airbnb. CENX we closed out for some profit on long put, looking to repair that one. QuantumScape. I lost international paper for profit. I lost that for about $1 or so last week on a repair. The other one I have a $47 call that's out to this Friday or out to the 20th. I'll confirm that. And I might roll that maybe one more week. Let's see here. SVXY, I'm looking to buy some dips. Took some profit last week on VIXM. Still have some shares running on that in the VIXI. REI is a nice energy play. We have a long call. We had a credit spread we took some profit on. We're in the shares. I did close out some of my shares last week on REI to free up some margin. I was in a couple thousand shares and still have a couple thousand more that are still running. CSTM, I think I took the loss on the credit spread, got right back on a new one. And Oracle, this is a new trade I want to talk about today during EOD at the top of the hour at 10 o'clock. So ORCL, nice little credit spread out to June, 75 by 72.50. And that's a stock I also am willing to take some ownership on. If you have any requests, type them in the chat. Let's take a look. I will say that I'm pretty happy and pretty psyched to see what this turd of a currency is doing. 104.43 on the Euro Swiss. We have recent highs here around 104.72. It's going to set another chart alarm. See if we have some pullbacks. So we did recently break this neckline. We did officially fill that 104 gap. We have any pullbacks? I'm looking for pushes back up into this yearly pivot. That's around 106.20. We have a nice little gap in pocket at 106.50. What I projected last week and what we discussed in class was a potential cup and handle, which is taking this low to high swing, and we can project a couple levels of symmetry. So right in here, we're just shy of symmetry around 105, but also if it's cup and handle, you project the break of this cup line, or this neckline rather. So we break that around 104, that projection gets us up towards 108.20. So I certainly will be thrilled to take profit at 108.20, but I've told traders the reality for me is probably 106.50 just to protect. I'm in a bunch of positions on Euro Swiss. I've been holding this thing for a while, and I'd love to hold it longer, but I think 106.50 to 10700 would be an excellent spot to protect. I can keep some remainder running, trying to go after that full level, or of course any dips and pullbacks, I'm looking to buy some more. But I do like Euro Swiss. It finally looks like it's turning the corner in a positive way, breaking and closing above this area. Hopefully we stay above 104, firmly stay above 104, and hopefully next stop is up here towards the yearly pivot at 106.20. So I like that trade a lot. CAD yen cross is okay. Luke will take a look. Think about Hex, Jason. I'm not even sure what that is. Crypto, Hex, US dollar. Haven't looked at it. Doesn't look like it's one of the more popular coins. It's trading at 15 cents. Not a lot of price history going back to January of this year. I mean, I could do some research on it, see what the heck it does, but I haven't seen a lot on it. So, is it something I could buy at like 11 cents and let it run? Speaking of cryptos, just really quickly, I did take a little stab at Bitcoin at 35K. That was, trying to think, I took a little nibble here around 38. I took a little nibble over the weekend at 35. We're trading at 32.8. And looks like we are heading down towards these previous lows in 2021 around 30K. So I do have some pending orders around 30,000 on Bitcoin. I'm just going to buy a little bit more, just chill, right? I mean, I want to take a look at this trend line. If we bounce hard off 30,000, well, let's look for some trend line confirmation and see if this thing puts in a bottom. Okay, one thing I will say is I'm just testing. I'm testing. I'll test at 25. I'll test at 20. There's a yearly pivot way down here that's still available. 20,700. That's a yearly pivot that's still available. Okay, so we could keep dropping on the left-hand side of this trend line. So I will take some tests on this area of the big round numbers, these transaction levels, and I'll look for some confirmation on the right-hand side of the trend line to add more and see if we in fact form a bottom. So I'm looking for bottoming formations. I'm looking for a trend line break, but right now it's not happening. So if this accelerates to the downside, we could look for 30K. We can look for a capitulation move to the downside towards 20K. And I'm looking to see how price forms some type of bottom here on the right-hand side. One thing we might not see, and I talked about this quite a bit last week. Everyone for the last, 5-6 years has seen V bottoms, V bottoms, V bottoms, V bottoms, where these aggressive bulls just come in and take the market by storm. I don't think a V bottom is happening anytime soon. I think what we might have is we might have a reaction off of a level, but I still think the market's going to come and retest and stabilize. I think the market's going to have to prove it's going to round out these lows before we build a bottom. So I don't imagine V bottoms happening this year. I mean, obviously I'd love to see it because the broader market, whatever asset classes recover, V bottoms are great when you're bullish. But I feel like there's such a dramatic bearish sentiment out there with everything inflation, everything recession, everything concerns, everything tightening, that I think the market just keeps getting pummeled, beat down, stepped on, and the bulls are just struggling. Bears are in full control right now. And I would say that even though the bears are in control, they haven't been as aggressive and as violent as we're used to seeing. Bear markets are way more aggressive than bull markets. The old saying is bulls climb stairs and bears fall out of windows. We haven't seen a lot of window falling. We've seen, aggressive rejections, but still things seem fairly contained for now. It could get worse, right? We could have a capitulation move. We could have panic selling. We could have bubblicious feeling, stuff like that, but it hasn't really been the case yet. So we watch, right? I'm still monitoring these levels. Take a look at the big channels here. So I'll thicken this up a little bit. These are the big levels I'm watching as far as some type of structural fall, bouncing back and forth between highs and lows, connecting the dots. And if the market stays within the context of a corrective channel, I can see these areas playing out. But again, big numbers, 20% correction on the SPY, so on and so forth. Good question. Jay says, where's all the money going? Well, there's still a lot of inflows going in. There's dollar cost averaging happening in a lot of the major ETFs and funds. I talked about that. There is ETF flows. Yeah, right here. This was Q1 flows for $85 billion. So going into Vanguard, going into, there's Pro Shares. This is ultra short. So the TQQQ, that's an inverse ETF. I think an inverse ETF. Let me see. TQQQ. Okay, no, I take that back. So this is a leveraged NASDAQ instrument. So this is falling right alongside the NASDAQ. Anyway, but money's still going into these levels. But what's interesting is I did see a big drop. What the heck was it? I think I was in my Webull app, and I was looking to see sometimes on their market, like when you have your watch list on Webull, it's just an easy mobile app to put all your stuff in a watch list and check out what's happening performance wise. It has something to do with like inflows and outflows, and there was a lot more of like an exit happening where like people are definitely pulling out and going into cash. Now again, you can feel like you're safe by going into cash, right? And feel like, oh, the pain can't get any worse. But still, I mean, I've been in for a 401k, for example, I've been in a principal stability fund since December of last year, and my 401k is, I think, down like 1% for the year. I'm down 1% because number one, it doesn't really have a lot of growth opportunities. I can't pinpoint. I've got half of it that I manage. I've been in a lot of energy and stuff with my cash margin accounts, which have been doing really well. But as far as like just the broader targeted funds, I just went into principal stability because I did not feel confident we're going into new highs this year. So 1% down for the year compared to, most 401ks, like we said, are down double digits. I'm essentially better off right now. But what I need to make sure that I'm doing with that type of outlook is when I feel like we have a bottom in place or close to the lows happening, as far as like timing the market a little bit better, then I will crank up that dial, turn on the risk, and go into something a little bit more aggressive so I can start buying things that will have a recovery. So what I need to be careful of is I don't think we're going into like these big tech rallies that will be longer term. I think if we have recoveries, case in point could be something like, okay, Facebook, right? Facebook's back down below $200. Are we trying to put a low in here? Maybe, right? Is this going to consolidate longer on Facebook? I mean, look, you have this massive gap on Facebook. Is this a company that's going to get back to $200 some a share? Most likely, yes. Okay, how about Netflix? Is this a company that's going to return to $300, $400? Probably, right? I mean, look at these crazy gaps to the upside. Netflix is down to 176. I mean, there are these amazing gaps that price is going to fill eventually. I just don't know where the bottom is, and neither do you. So all we're doing now is we're either dollar cost averaging and lowering our cost basis. So when it does return to this gap, you're in profit. I'm not asking for Netflix, nor do I expect to hold Netflix to try to return to these highs again. I would be happy right now. I'm trying to think where my Netflix break even is. I'm going to look. I think my break even's probably around 200 something. Let me check. Netflix is right here. My break even is 310. Ugh. So 310. If I fill this gap at 330, I'll take 20 bucks a share. Now, could I also have something running? I mean, I could start doing another credit spread on Netflix. I could start doing. Heck, I could do a long put right now and try to lower my cost by a few more bucks for the rest of the month if it's going to keep getting uglier, right? But I could also do a credit spread, let this thing drop, maybe grab another 10, 15, $20 out of a long put, lower my cost, take some ownership, and do it again. Buy another 100 shares and maybe own it at 170, 160. If I did that for another 100 shares, let's say I bought it at around 176, that'd put my break even down to 265. If I get my break even to 265 on Netflix, which is the start of this gap, do I think I could take profit here at 300 plus, 320 bucks? I do. I just have to have the cash to repair it, right? But there's just a lot of stocks that are just getting pummeled, you know? And look, I don't know where the bottom is. Nobody does. And all we're trying to do is survive. I mean, my best friend is all he cares about is like, I'm just putting money into Bitcoin. Like, that's great, dude. But Bitcoin's also suffering the same fate that the stock market is right now. It is red. So you're asking for a bottom in Bitcoin, just like you're asking for bottoms in the stock market. Although I would say that the stock market is going to be highly correlated with what the Fed is doing. We know what the Fed is doing. They're raising rates. They're tightening their balance sheet. That's not going to change. All the Fed can do for this soft landing is try to give the market as much information as it needs to digest it with reason or with like some type of organized chaos. Because we haven't really had panic selling yet. The Fed hasn't really created spirals or anything like that yet, and I think they're doing everything they can to avoid that. But nobody's happy about what's happening right now. But I will say this: you have to have some type of common sense to realize that this is not abnormal, right? What seems like everything is just getting worse and worse and worse in the headlines. If you look at this chart from the technical side, from this low to this high, this is a correction, right? I mean, the good thing is we're not into full-on bear market territory yet. And even if we do we end up stabilizing here, basing at 20%, and then starting to rally back up to justify those? Do you remember that stat I showed last week? I've got the image right here. Some of the worst starts we've had in the history of the S&P 500. I have the slide right here. We're the fourth worst start in the history of the S&P. And most of the time you see here, when we've had these double-digit declines, the market has had a rally for the rest of the year. So the argument could be like, well, it's different now. Sure, maybe it is. Maybe it isn't. You don't think big money pays attention to stuff like this? You don't think that historically the month of May has been a bullish month? You don't think that means anything? So if the market's interested in trying to find something to kind of save the month, they'll rally. I just don't know if it's happening now or maybe it's turning after this week. Maybe we get to like the midway point in the month, we close strong. I don't know. But I'm not going to grasp, right? I know my break evens. I know what I'm doing to repair. I know I'm weathering the storm right now. I know I'm trying to trade Forex aggressively to make some money. And Forex right now is going to be my best way to generate some income because I can be very neutral on positions. And I'm just going to keep grinding in Forex. Generate some income, lower my cost basis in stocks and options. If I get stocks called away, great. I want to get them called away at my break-even points or better, and get some capital back. So, yeah, Jason asked a good question. He says, "Is Forex the best thing to be in right now?" I mean, if you're looking to be a trader, yes. Like Forex is the best way to be fairly nimble, right? Luke was asking earlier about CAD pairs and yen pairs. I mean, look, the dollar yen is still up near these highs with a weekly time frame that is how many candles in a row? Obnoxiously bullish, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks in a row bullish on the dollar yen. I'm sorry, this doesn't happen very often, right? This rarely, if ever, happens. 10 weeks in a row, that's insane. Okay? Are we overbought? Heck yeah, we are. Are we divergent? Pretty much. You go to the daily time frame, yes. I mean, all the technical signs are there to be looking for a short. But it's just as easy as this. We're on the left-hand side of the trend line. We're not getting on the right-hand side of the trend line. Once we get this trend line break, I'm way more interested in a near-term short on the dollar yen. Okay, is it going to happen? I hope so. Otherwise, this is broken, and it will eventually balance. That's the thing, is it will balance. We still have a bar count on the daily time frame that's 700 pips away. I'm super interested in that trade. I just don't know what it's going to take to finally form a top and actually have the bears take this thing down. Because my concern is that this goes nowhere for the next 3 months, and my target, which is a moving target based on a daily time frame, over time just catches up. And so if price just stays here for the next 3 months, my EMA cluster catches up, and all of a sudden we're talking about, well, my target's now 126 instead of right now at 118. That's a big difference in profit potential. But if we turn the corner and break this trend line, I'm way more excited about this actually dropping. But if we see yen strength happening this quickly, or we see dollar weakness happening like this, then we're going to see another wild move in basket volatility. Could be yen related, could be dollar related. What goes up for 10 straight weeks could drop for 5 straight weeks and take it all back. We don't know. But all I'm looking for on yen crosses is confirmation and staying very patient. Don't get too heavy on the left-hand side of this trend line just in case it keeps going. Okay? All right. But there are some good-looking trades that I'm excited to be in. I'm long euro dollar at the lows at 105. I know it's not the bottom necessarily, but I think if we have a 1, 2, 3 correction, get back to 110, possibly back up here towards 112. I will still be looking to add some positions on euro dollar. Also, we've got these larger trend lines I'll be watching. Euro Swiss, if we get up to 106.50 or higher, that'd be awesome. Pound CAD, Pound Swiss, one of my favorites. We had a great trade last week during the Flex Trading Room. We bought this equal low right around 72.50. I think it was like 72.50 or 72.70 last week on the pound Aussie, and it's up to 7,600. So we took profit. I took profit about 108 pips last week. It was a single day trade, up 110 pips. If you just left it running for another day, you're up, 200 and some pips. Awesome trade. So we're taking our opportunities when we can find them. We're trading what looks good. We're sticking to our plan. We're surviving. We're doing our best. Okay. Good stuff. All right. Let's try to see here. Anything else? So this week earnings, I've got some earnings notables. We'll take a look at if anybody's interested stocks options wise right here. Palantir, which we traded not that long ago, we flipped for a couple dollars a share. Lordstown Motors is a SPAC play. That's an EV play. Lordstown Motors a ride. It's single digits. I'm done with it. I have some ownership of it. AMC, the old GameStop AMC, the squeeze plays. It's trading at like 16 bucks a share. Novavax, Blink Charging, another one. We kind of have some EV plays to hit hard. This is all aftermarket. So Palantir, Lordstown already came out this morning. Everything else is aftermarket close. Workhorse, another EV play. Coinbase on Tuesday. That'll be interesting, good or bad. I've got a credit spread on Coinbase. I'll see if I make money on it. If we have a positive jump, great. SoFi, I'm long on SoFi by quite a bit. I'm down. I think my break even's like $10 or $11. It's down to like $7. Walt Disney. Aftermarket close on Wednesday. They had a big opening with Doctor Strange, 185 billion. It was second to Spider-Man. Good thing is they still have Disney Plus. They're having reopenings in the parks, and a good box office weekend for their latest release. So Disney is a very attractive stock, I think, at all times. The levels I was looking at today, I was going to discuss today in Equities on Demand at $90. Pending order on Disney at $90 if it gets down to that low. Beyond Meat, we'll take a look at it. I'm curious, especially if it's back to those IPO levels. Rivian, probably one of the worst decisions you can make in trading is get excited about an EV play, electric vehicle play, that doesn't even have any releases. Amazon's got stake in, Ford just dumped their shares in it, and Rivian started at like $100 or more for its public offering, and it's trading at like 30 some dollars. So hugely disappointing, and I am staying clear of all that crap for right now. And then we have Backed Holdings, Affirm Holdings, Aurora Cannabis, Lightning Motors. So really, this is an interesting week. A lot of this lines up with electric vehicle type plays or peripherals. Lightning Motors, Blink Charging, Lordstown Motors, Workhorse Group, all those are electric vehicle plays. I'm not doing a lot to touch those. They're already super cheap. Maybe there's a squeeze that comes on them, but if you want to get a squeeze, how about buying Tesla at a cheaper price? I mean, Tesla's trading what? 835. 9:30 Wall Street openings, crushing the markets. All right, so we have fresh lows on the SPY. If we had Tesla back down to 750, I would buy the dip. Tesla's going to be volatile, but I'm interested in 750, 650, 550. These are all levels I've talked about in Equities on Demand. If we take this entire swing from low to high, just look at this as a massive swing right here, and we come back to around this 50% zone. So the reason I'm talking about Tesla is I would rather buy Tesla than buy a bunch of little tiny electric vehicle companies. Now, one of, let's say, 50 could be a great one that pays out. But if they're going to be all crap and they have no money and they're in a period right now where it's hard to raise capital, it's hard to use capital because it's more expensive than it was a year ago or 2 years ago. I think a lot of those companies can run out of cash, and we're probably going to embark on a pretty hefty mergers and acquisition season. We're going to have some stock buybacks. We're going to have some bankruptcies. We'll have, I don't know, we'll just have this. It's just a cleansing. I mean, that's essentially what it feels like. Tech is beat up really, really badly. I read something over the weekend with Stock Twits. Let me take a look at it here. Something to the tune. It just discussed what the kind of the landscape was for these tech stocks in general. So we have NASDAQ down, Bitcoin, keep going. Earnings this week. Oh, come on, this had to be it. 28% of forecasters feeling recession was just around the corner. More than 6 million people quit their jobs in April. Oh, it's here. It's right here. I've got this bear market. I took an image of this article that I saved from the weekend. Okay, let me find this little news article. Bear markets, 19 bear markets in the last 140 years. The average price decline was 37.3%. Average duration was 289 days. This is what I was looking for. The good news is that many stocks have already reached the point. We have 49% of the NASDAQ constituents more than 50+% below their 52-week highs. So I'll say that again. Nearly half the NASDAQ is off their highs by 50+%. We know that tech has been beat up badly, right? 77% of the index in bear market territory, which is 20+%. Good. We're going to talk Delta this week too. I'm looking at some option plays on Delta. Trading at 39.93. We have any dips? I'm buying travel stocks on dips. 37, 36. I might look at a 40 by 39 or 40 by 39.50 and just try to own this thing lower. Let's go out for maybe a month. So I'm going to write Delta down. We'll talk about Oracle as well. And we'll be in the thick of things. So let's see here. So who was asking earlier, where's all the money going? Okay, $3.4 billion comes out of stocks, $9.1 billion from bonds, and $14 billion from cash. They note many of these moves were risk off headed into the recent Fed meeting. Now, to tie this all up, for every $100 invested in equities, only about $3 has left. So money is still very much in equities for now. But that 10-year note keeps creeping higher, 3.5%, 4%, closes the gap on those inflation numbers. You're going to see more and more exiting, more and more safe haven trading, where cash is not a bad spot to be. People can always go back in and reinvest on the dip when they feel like the coast is clear. But right now, we're still guessing where the bottom is. Okay. All right. Am I buying euro dollar AL? Yes, I'm long euro dollar. Yep, I'm long at 105. I've been long euro dollar for a little bit. I was hedged, right? Traders know this. In my flex room, I was hedged where I was long dollar Swiss and I was short, or I'm sorry, I was long dollar Swiss and long euro dollar. So one of them was going to be a winner, the other one was not. I was right on the dollar Swiss. I took that thing all the way up towards 98 plus, and right now we're trading at 99 plus. So I've taken a nice run from dollar Swiss as high as I possibly could, with hanging on to some really nice positions. This run here from 93 plus. We had a breakout above 93, 9,400. I've held positions all the way back into these pullbacks at 9,000. So from 9,000 to 98 plus, I've been long dollar Swiss. Now that transfers over into I was hedged. So my profits on dollar Swiss paid out really nicely. Now I'm starting to get repositioned on euro dollar. So could euro dollar drop into potentially parity? Possibly. But I also think that over the last 7 years, we've seen 105 hold pretty firmly. So fifth wave moves, dollar index, DXY. If we have a correction coming, a 1, 2, 3 type move, coming back into this area around 110 to 112, I would be happy to get out with some, break even or profit levels on the euro dollar if we pull back towards 110 to 112. So that's my little profit window right now if we can get it. If this drops into parity, I'm buying pretty heavy down at parity, and I'm looking for a decent reaction back up towards 108 to 110. I mean, the one thing I like about Forex is yes, the market can drop, the market can rally, but when it drops aggressively, it rebalances. When it rallies aggressively, it rebalances. You know, it's proven it for 20, 30 years. So you just have to make sure you trade with, if you're going to do something like that, you got to trade small enough that you can get back in and not be, squeezed out by being too leveraged, right? But yeah, the dollar strength has been pretty awesome. Take a look at the DXY. We're sitting at perfectly technical levels to short. We have monthly targets now that have lined up really nicely. We're sitting near multi-level range highs or multi-year range highs. I'd love to see the DXY short. Okay, but again, why would we force a sell trade when we're on the left-hand side of the trend line? Here's the right-hand side of the trend line. There's no confirmation. We want to see price stalling, maybe have one more test of the backside of the trend line, form a topping pattern, then we start to trade it with confirmation. I don't like saying, hey, let's short the dollar, and then nothing happens, right? It just goes higher. That you feel like an idiot. So if it's going to stall, then let's consolidate, right? If we're going to top out here, let's get a rising wedge and then break. That's when we can trade it. And we can see the other currencies respect that as well. We'll see the basket correlate like that, right? But stay patient on yen crosses. Watch the dollar crosses carefully. Hopefully this week we'll see the euro Swiss continue to rally. I would like to see the euro get some love because there's been discussion now that the ECB is starting to make some headlines and when they're going to start raising interest rates for the first time since like 2011, 2012. The ECB actually might raise interest rates from zero. And if that is the case, I think the euro is going to get some pretty good flows. If it does, that bounces euro dollar off the lows. That keeps euro Swiss pushing higher. We'll see how that translates into other parts of the basket with the euro pairs, euro Aussie, euro CAD, euro New Zealand, for example, making some recoveries. But we'll take what we can get. Okay. All right, traders. Look, we're going to have a busy week ahead. I know that expiration-wise is pretty light for me, but there will be a lot of repairs we talk about in class today for equities on demand. This week, trading rooms, Tuesday, Wednesday, Thursday, flex. Monday through Friday, of course, equities on demand. If anybody's interested in checking this out for the first time, for those of you watching, number one, if you do me a quick favor, hit that thumbs up button for me and like the channel, like the video, support the channel. I appreciate it. If anybody's interested in trading with me live, if you want to trade Forex with me, quick way to do it and do it for the cheap. Come to our website, pulverport.com. Go to systems and trading rooms. $27. You can trade with me for a month. Flex trading room, equities on demand. We're live Tuesday, Wednesday, Thursday for Flex. We're live Monday through Friday for equities on demand. Okay. We're active. We're talking about the markets. We're doing it with big groups of traders. And we've had, equities on demand has been a year strong. We're killing it. Flex trading room, 4 years strong. We're killing it. We're doing everything we can to trade and survive and make money. I'm happy that Forex, I'm up like, for my larger accounts, I'm up like 5% compared to being down 10, 15, 20% like the markets are. So Forex is a nice equalizer, diversifier right now. And then equities on demand, I've had a lot of profits that I've generated. I've lowered my costs on a lot of stocks. I'm trying to, stay with the decline in the markets, but I'm still weathering a drawdown. I'm in about a 12% drawdown in stocks right now, but I'm not closing positions. I'm not taking losses. I think my 12% drawdown dollar cost averaging or lowering my cost basis, with a decent stabilization and some type of even a half-ass broad market recovery, will probably end up generating 10 to 15% profit for the year. So I'm not that concerned with how we've been doing. It's funny how we have to navigate this stuff every week, and it just seems like the market just punishing like bears, recession, interest rates. Ugh, it's exhausting, But at some point you get numb to that. It's just news. You watch your charts, you watch your technicals, you trade, you lower your cost basis, you keep trading. Just focus on the process. There's not a lot of places you can be right now that's going to show green. Forex is a great market to be in because you can be bullish and bearish on any currency, So we follow the flows, we keep trading. All right. Also, I have class today for the Pockets Pattern Pro. We're going to be doing a mastery class today at 1 o'clock. And I'm really excited about that. We're going to be talking through some additional strategies. I have that robot that has 6 strategies in total. We're talking about 4 of them today. They're kind of bonus strategies. Okay. So I'll see all my traders this week in equities on demand at the top of the hour, flex Tuesday, Wednesday, Thursday, and see you in class for Pockets Pattern Pro. The alliteration eludes me. All right, everybody, let's have a good week. Okay, and I'll see you back here on Friday for the YouTube channel, youtube.com/Chris Pulver. Appreciate the thumbs up and the likes, and thanks for being here. Okay, if you have any questions, let me know. Leave some comments. I'll get back to you. And let's have a great week. All right, see you. Bye.